Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Brandon Fontaine. Brandon is an economic and fixed income research associate at the firm and runs Strategas' proprietary Slim survey, which we'll talk about today. But first, Brandon, how are you doing?
I'm doing great, Ross. How about yourself?
Doing really well. Thanks for joining us at the top of a new year here. And I want to start with the Slim survey. It's your proprietary work. If you could briefly explain what the survey is and then what the most recent reading is telling you about the manufacturing environment today and what it might mean for 2024.
Our SLIM survey is our proprietary in-house manufacturing survey where we survey companies on two components of the ISM survey each month, new orders and supply deliveries. Our goal is to lead these by about 2 weeks, and we published our in-house survey this morning. Our new orders index came in at 61.9. That's up about 17 points from the contractionary reading that we got in December. And just as a quick refresher for the folks at home, a reading above 50 indicates the U.S. manufacturing environment or new orders expanded in a month, while a reading below 50 indicates contraction. So manufacturing has been weak for much of the past year and a half or so, and we're really looking for that inflection point higher. And this is a step in the right direction. Obviously, we want to see more readings in expansion to really indicate to us that this is a durable manufacturing expansion, but this is very good nonetheless. And there are some very strong tailwinds for the sector going into 2024. These include potential Fed rate cuts, potential fiscal stimulus, along with previously passed industrial policy going into effect.
Right. And higher interest rates, while they didn't really hurt the consumer in a meaningful way in 2023, obviously had a big impact on the manufacturing and housing sectors. They're not as big, so they don't get as much press as those sectors. But obviously, a big impact in the pullback in rates towards the end of last year probably certainly helped those sectors a little bit more than the consumer. Let's shift to the other part of this, which is the supply chain piece. You talked about it a little bit. Throughout COVID, supply chains were in deep focus, and now again, with geopolitical issues in the Middle East, supply chains are back in focus as well. I wondered if you could talk a little bit about what you're seeing on the supply chain front and what that might mean for the industrial outlook in 2024.
So our supply deliveries index is actually meant to answer this question. And just as a quick refresher for how that index operates, a reading above 50 means supply deliveries were slower, whereas a reading below 50 means supply deliveries were quicker. And we came in at 47.5 in January, up from 40 in December. This means that supply deliveries continued to quicken, but the pace at which they are quickening has slowed. And while none of our participants are seeing any real impact and increase in delivery times from the bottlenecks yet, there is a lot of concern about that out there. So when we talk to our participants and we look at the comments, we see that they're worried about this becoming a problem going forward. You have the Red Sea, as you mentioned, trade through the Suez Canal has plunged, and apparently shipping companies and their workers are afraid to travel through that corridor. Then on the other side of the world with the Panama Canal, you have a drought that has substantially decreased the number of ships that can go through it at any given time. So you have two bottlenecks on either side of the world, which leaves the option for shipping to Europe and to the east coast of the US going around Cape Horn, which elongates the journey substantially. And we are concerned, and again, while we have not seen any impact on our supply deliveries index yet, we are concerned about potential knock-on effects that this may have on goods inflation, just as it returned to pre-pandemic trend.
Right. And this was obviously one of the major drivers of inflation during the early period of the COVID-19 pandemic. So everyone is all too familiar with the impacts on inflation that these supply chain bottlenecks, especially on transportation and shipping, can have. So that's why I think it's really important that we follow your all's proprietary leading work really closely. I think this will be really useful to follow over the next couple of months. So we'll be sure to have you back in the future to talk about this. But Brandon, I want to thank you so much for the time today. This has been really insightful. And again, we'll talk again soon.
Thank you, Ross. Have a great day.